Hi and welcome to another module of our wealth growth series, this time around the importance of routines. Now, routines are important for a number of reasons. First of all, most traders abide by these routines. Machines and computers trade with certain trading patterns, often around times of day, and a lot of the trading done today is done in automated machine-based trading patterns. The markets open at certain hours of the day, which command your times of focus and attention, of course, and major market-related news publications get issued at specific times of the day. Lastly, and probably most importantly, the main price action happens in specific hours of the day. With price action, we refer to the largest volatility because most trades come together, and that is usually when traders love to trade. So, without further ado, let's have a look how we plan our trading day. Now, everyone's going to have a different routine. That is obvious because it depends on the instruments you trade, on where your passion points and areas of interest are, and whether you're trading forex or futures, ETFs or stocks. Can make a big difference, and especially also the time of day, because it depends on the time zone you're in as opposed to the time zone you're trading from. Now, what I do in the morning is I go onto fxstreet.com, which is a very good news resource, but more importantly, it has this economic calendar. And this economic calendar shows you all the key events that happen in the world. Usually what I do is I filter this to high, because how I trade, the medium impact events are not really that relevant. And then I try and see what's on today and possibly what's on tomorrow. And sometimes there's nothing, like today there's no major event, which is great, because then I know there won't be any disruption and the market will trade with a certain regularity, unless there are other news events happening, of course, which can always be the case. But for example, if we see events like the non-farm payrolls in the US or consumer price index releases of any nation, really, those are events that often have a relatively high importance on trading in general. You want to look out for events that affect the instrument you're trading with. So for example, if you're trading forex, it's very difficult to assess the impact on exchange rate of certain events, because while you would assume a certain direction of a currency upon a specific event release, there are enough people that believe the opposite and think differently. And that is really the trick, to understand how people think in masses. And that goes for anything you trade, because wherever there's a market, there's people buying, there's people selling, and the laws of the market establish that there are enough people on each side of the spectrum to establish a certain price. Enough of theory. So we go into the economic calendar. Usually I like to have a quick scan if there's any big events. And it's important that you set this to your time zone, right? So that you see the right times. And then I usually take notes of some of these events in my Outlook calendar with a half-hour advance notice, so that if I'm really deep into trading, I don't get caught by surprise if suddenly an event happens. Next, I go to TradingView, where I look at certain market quotes. And this again depends a bit on the instruments you use, but I like to get a bit of an overview in general. So I look at the indices, the futures across usually energy, metals, agricultural, and then important always to bear in mind the time frame. Unfortunately, this sometimes defaults to the wrong kind of time frame. If you're trading in the day, maybe you only want to see 1 month of movement, so be careful to always select that. And then you can see obviously below here the key index values like the S&P 500, the Dow, the DAX, the FTSE. And in case you're interested, you always can click on them and get into more detail. For me, it's generally more about getting an update on what happened overnight, since I trade every day. Again, with the currencies, the same thing. Now, for example, I don't trade Forex right now, but it's very important to know how Forex is moving, because that has a huge impact on some of the other instruments that I do trade. So once I go through this, I usually take a look at some of the biggest gainers and more importantly the biggest losers, because those are the ones I'm looking at to possibly enter if there is a potential recovery in sight, and then some key stocks and also cryptocurrencies. So I do trade a bit with Bitcoin, but not as my main instruments, and gives a good indication, especially when you're on the longer time frames, as to where a good entry price would be, and obviously if you hold Bitcoin, when a good selling price would be. And that's really it. That's what I do on TradingView early on in the morning before the markets open. And then lastly, I go to Bloomberg, where I watch the Bloomberg TV in the early hours before the markets open. So this goes back to the topic of time zones, right? And that's something that is really worthwhile exploring and spending a minute on. Depending where you are, there are certain markets that suit your rhythm best and your routine. So let's assume the following. You work in Eastern Europe or the Middle East, for example, and you only have time to trade in the evenings when you come home from work, right? Or obviously you would have time very early in the morning before you go to work. That really depends on you. But let's take the example of somebody who comes home from work, has a bite to eat, and then wants to look at the stock market and do a few trades. Now, if you're based in this Eastern European or nearly Asian time zone, the American market is very interesting for you, because obviously the American markets, especially the East Coast, open when it's the end of day in your region. So you want to be there and have time to prepare ahead of these markets opening, ideally, because the routines we just went through, they do serve to establish your strategy of the day. So once again, depending where you live, it can make a huge difference to your trading success that you trade on exchanges that are busiest when you have time to trade on them. And by busiest, I usually mean the first 2 or 3 hours of the day that they're open, because that's mostly when the bulk of the business happens. Now with the US, for example, that is mostly activity, because then once the London and then Frankfurt Stock Exchange close, the volumes of trade diminish rapidly, right? So don't take this lightly. If you spend time researching which stock exchanges are the most relevant for you, then you're more likely to have a relatively stable routine, because your lifestyle allows you to have that routine. If for some reason the evening is not great because you have too many leisure commitments in the evening, then it may be worthwhile, taking the early morning session and then going with the Asian markets. Another point to consider is you should only trade markets that you're familiar with, that you understand the politics, or that you're at least interested in the politics going on. So don't ideally trade a market you don't really understand, possibly a country you don't understand the language of, so when news comes out it has to be translated, which takes time. So this really depends, but it also applies to some extent to Forex, because obviously the exchange rates get updated when the stock exchanges are open with more volatility, and you like volatility when you trade Forex. So bear that in mind. You don't see many people talk about this here on YouTube, but I do feel it is an important element, and it puts you in the driver's seat with a lot of confidence that when the markets open, you've done your homework, you've studied your economic calendar, you've seen where all the key instruments sit, and you may already have an idea of where you want to end the day if you're trading in the day, or where the day will go in case you have a longer time horizon of trading. Once in a while, I look at the New York Stock Exchange trading hours, because there's a few holidays in the year that you need to be aware of. So I trade the US markets quite a lot, and the US have quite a few holidays. As you can see here, the 2020 holidays. And on those days, the stock market is obviously closed and the volumes are very low, because other countries are still open, but it may not be worth your while to spend time trading that day, simply because the movements are not big enough. So that's my routine. I'd love to hear what yours are, because I'm sure there's many of you that have different routines that apply similar logic, but maybe use different tools and resources. And if you share what those are, I'll be happy to make a video on that for the next time. With that, thanks for today, and looking forward to your questions and comments. Cheers.